Hello and welcome to traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is August 25 and we're starting from euro-dollar pair with Jakub Novak as usual. But first, let's have a look on 5-minute chart for analyzing yesterday's transactions. The test of 1.0847 coinciding with the decline of the MACD line from zero prompted a sell signal that led to a price decrease of over 25 pips. Today, much will depend on Fed Chairman Jerome Powell's speech at the Jackson Hole Symposium, in which he may take a firm stance on monetary policy despite all signs of a slowdown. Accordingly, this will lead to another drop in euro-dollar pair. The situation will change only if Powell announces that the Fed no longer plans to raise interest rates. In that case, the pair will rise sharply. For long positions, buy euro when the quote hits 1.0812 and take profit at the price of 1.0844. Growth will occur only amid a dovish tone from Powell. However, make sure that the MACD line is above zero, or is starting to rise from it. Euro can also be bought after two consecutive price tests of 1.0782, but the MACD line should be in the oversold area this time, as only by that will the market reverse to 1.0812 and 1.0844. For short positions, sell when the quote hits 1.0782 and take profit at the price of 1.0747. Pressure will increase at any moment amid a hawkish tone from Powell. However, when selling, make sure that the MACD line is below zero or is starting to drop down from it. Euro can also be sold after two consecutive price tests of 1.0812, but the MACD line should be in the overbought area this time, as only by that will the market reverse to 1.0782 and 1.0747. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Petar Rikimovich. Gold has been trading downside in the background, and we found rejection for the support this morning, which is a strong sign for further rally. Due to the test reject of the support and the oversold condition, Petar sees potential for the further rally towards upside reference. Upside objective is set at the price of 1921. Stochastic oscillator is showing fresh bull cross and oversold condition, which is another good sign for the further upside movement. Key support is set at the price of 1911 and 1908. And now it's time for USDJPY currency pair. This trading plan is presented by Ralph Shadler. The USDJPY pair is trading in the green at 146.11, and it seems determined to approach and reach new highs. The price jumped higher as the DXY rallied while the Japanese yen futures dropped. The bias is bullish, so further growth is natural despite Myra retreats. Fundamentally, the US data came in mixed yesterday. today, the Japanese SPPI reported a 1.7% growth versus 1.2% expected, while Tokyo Core CPI increased only by 2.8%, less compared to 3.0% growth forecasted. As you know, the Jackson Hole Symposium should be decisive. The Fed Chair Powell speaks, ECB President Lagarde speaks, and the US revised EOM consumer sentiment could bring shape movements in both directions. The USDJPY pair rallied after testing the ascending Pitchfork's lower median line. Now, it has taken out the 145.95 high, former high, and it challenges the median line. This represents a dynamic resistance. After its amazing rally, we can exclude temporary retreats. Still staying near the median line may announce an imminent breakout. Jumping and closing above the median line and above 146.21 indicates further growth and is seen as a new buying opportunity. And finally, here's Laurie Bailey with AUDUSD pair focused. Let's have a look. The Australian dollar closed Thursday down by 63 pips. The upper shadow reached the 0.6493 level, the May 26 low, and as a result, we revised the target level. The Aussie may fall to the support level at 0.6388. Consolidating below these levels will extend the decline to 0.6295. If a reversal occurs before 0.6388, the price might attempt to surpass 0.6493 and rise to 65.70. The MACD indicator line is approaching this target level. On the 4-hour chart, the price hasn't fallen below the balance indicator line. It's a red line on graphic. So yesterday's decline might be a correction from the previous 4-day growth. The Marlin oscillator has moved below zero, but it appears that it intends to return to the positive territory. Furthermore, near the 0.6388 is the MACD line, its blue line on graphic, reinforcing the support. Thus, the speculative range for today and the next 2-3 days is extended to 180 pips, 0.6388 and 0.6570. That's all for today. See you online soon and good luck.